Year to date, we have 119.32% on 127 trades. It's very low maintenance. We're all the way through mid-August and only 127 trades, right? So we're going to get into some back tests with the ESDE mini futures, super duper liquid. We want to make sure that we do this on multiple time frames. And this is going to be more conservative than Bitcoin, Ethereum, or NASDAQ. So let's get right into it. Let's look at the 45-minute chart. We're going to bring up our strategy tester, the margin requirements here. So $15,180 are going to be your margin requirements. So we're going to go over to our strategy tester and we're going to set our parameters. So the first parameter is obvious. It's going to be the initial capital. And we're just going to go ahead and use the margin. And we'll see if we would have had a margin call on some of the different time frames. And then I'll explain how I like to handle that stuff. But this is not financial advice. This is for educational purposes only. So we're going to go ahead and just keep this to one contract. Now you can scale. We have some traders that scale in and out of contracts. It's a little complicated. We back test with one contract to keep it simple for beginner traders. If you're not already a subscriber of the channel, pyramiding is going to represent two or more orders in succession in the same direction. So we want that off because we're going from uptrend to downtrend. And I'm going to show you that in a second. January 1st, 2024 to 2024, August 14th. Now you can see we were up a lot more than 55%, and we've taken quite a dip here, which is pretty good if you're an investor. This gives you an opportunity to kind of get into the market as we head into this crazy election cycle. Now, one thing I want to point out here is we are crushing the market. This is about 5 years of S&P 500 gains that you would see in your Roth IRA or 401k using our indicators. You can see that our backtest is directly aligned with our uptrend and downtrend signals. And you can see here the little arrows kind of indicating exactly which candle we come in on. I want to point out a couple things here. So not only is it conservative, we did have a drawdown of 46%. It's super important. Another thing I want to denote here before we go ahead and look at some other time frames is 42.50% profitable on our trades. That means we're winning almost half of our trades. Even though we've had this big tumble, we're still running overheated, but we're going to keep an eye on this as we go down in time frame. This doesn't necessarily represent a further dip in the market, although it does look like we could potentially have a full revisit of a triple bottom between this bottom here and then this double bottom, and then we might get a bigger bottom here. Maybe it goes down more, but we don't know. So we had a lot of opportunity to take profit, and that's another thing with Happy Trader. This is not something that is going to make you trade the way that we backtest. And in fact, you can make much larger percent returns if you take healthy profits and you buy in some of these dip ranges. So you get a buy signal here, which is a potential trend reversal, and then you quickly get an uptrend signal. And if we stretch the chart out, you can see just how much the market mooned off that. And that was after our kind of consolidation period. And you can see the market's getting bought back up. Institutions are likely deploying capital or rebalancing or pivoting or sector switching or whatever, right? So that's really going to be that. So let's get back into the strategy tester. And that's really going to do it. 40 trades, really easy peasy. We did have the drawdown, but man, did we do good. If we just put in that initial capital, we more than 2x the capital this year alone at the peak. So that should speak for itself. And if you're a prudent profit taker, this should be something that's very exciting for you. That pretty much does it for the 40 trade back test that gets 55% despite these huge drawdowns. Now you can see we didn't go into the red. Let's see if we drill down a little bit. Let's go down to the 15-minute chart and see what happens there. So we're going to use exactly the same date frame, but we're changing the time frame, and we're going to run the same exact report, and let's see how that pans out. Now, this is a fun one to look at here. So let's go ahead and look at this one because this is even more of an annual gain, but we have a lot of downside. Now, I'm going to explain the hedging technique right now. All right. So, whatever you want to do, but If you're smart and you're a trader and you've been in the markets, you can see the value of this type of back test. So this is just year to date. We have 119.32% on 127 trades. It's very low maintenance. We're all the way through mid August and only 127 trades, right? So crazy. Now, this is where it gets more interesting. Percent profitable, 34.65%. That 1 out of 3 trades won is right in line with the happy trader convention. So that's good. So it's looking like for the ES, so far, the 15 minutes is sweet spot, but you have to know how to hedge. And I'm going to tell you how. So the way that I like to hedge, and I'm not telling you how to hedge or telling you how to trade with your real money, but the way that I like to hedge is to have a core position. So let's say we have a core position on the ES and we're long. That's obviously our core position. That's obviously our thesis. So if our position takes an immediate drawdown of, let's say, X percent, maybe it's 2, maybe it's 5, that depends on your risk tolerance. You can put on 10 of the MES contracts of the micros, right? Directly offsetting in those two contracts, but you're not subject to wash sale because you can't take both sides of the ES. When we start to get back up above water, well, maybe this isn't enough. So maybe we want to get up about 3 or 5% before we take that hedge off or start peeling that hedge off. And we just leave it on as long as it stays red. That way you're not losing money while we're in the red. Then when it starts to go green, we get 2, 3, 4, 5%, whatever, again, whatever your risk tolerance is, you can start to peel off those MES contracts and let that thing start to sail and reduce the drag and just keep an eye on it. If it gets down here, obviously this one had a huge run up. Maybe it was smart to take profit there. If you started and you almost 2x'd your money, maybe that's time to take profit. But again, I'm not telling you what to do. Now, if you draw all the way back down to here and you want the full breadth of this whole 119%, no matter what, you're going to get a lot more drawdown, right? There's no free lunch on Wall Street, like they say. And again, you would have had to have delta hedged here and then peeled that hedge off here, right? So, yes, you would have gotten a small margin call, and it looks like it would have been a few $1,000s unless you avoided that by delta hedging. And that is why you should subscribe to the channel because I'm dropping knowledge nuggets for you. With that being said, we had a max drawdown of 57.72%, right in line with happy trader conventions. A win rate does not matter. Anybody that says that win rate 95, 98, 99, 100% win rate, they're totally full of it. And list of trades is going to show this. It's going to show this precisely that our winners are so much bigger than our losers that we can afford to lose a lot more than we win. So you can see here, big winner and big winner, big winner, big winner, small loser, big winner, kind of a big loser, but a huge winner right after that. So you can see the markets when they fluctuate, they have their swingy little fluctuations. And something else I want to point out is that on a lot of these losing trades, you have the opportunity to take run ups. And in some cases, it's equal to the trade value, sometimes even higher. So let's look at some of these. Here we go, $150 loser, but that thing ran up 1900 bucks. Who in their right mind who's trading happy trader wouldn't take like a free 1,000 or $1,200 on their position and then see the market start to go down over time because you can see this is going from 2.2 to 2.5 and not take some off the table, right? So there's delta hedging, there's the run ups, there's all types of advantages when you're using Happy Trader, and all you have to do is set your buy and sell alerts. Buy signal AI, sell signal AI, sentiment AI buy, and sentiment AI sell. The notifications go to your email, they go to a webhook. If you're a quant trader, you can show a notification, notify in the TradingView app so your phone will buzz. You can send a text or send an email, whatever you want to do, right? Any which way. So you can also set it up once per bar, once per minute. It's not going to affect the back test. So if you are a time trader, you want to trade once per minute. If you're a bar trader, once per bar, it's not going to make a difference in the back testing. So let's go down to finally the 5-minute chart. And this is going to be the last one that we look at for today on the ES. And let's go to the overview. And this is actually kind of cool. 153%. We did have a lot more trades though, so you're going to have to watch those commissions there. And you can see we're winning less than 1/3 of the trades, but we still are crushing any hedge fund out there. But you can see delta hedge, delta hedge. You needed some patience here. Maybe take some profit. delta hedge, peel that hedge off. Okay. And then just listen to the happy trader signals. That's the way we do it here at Happy Trader. We're crushing all of the hedge funds, we're crushing all of the indicators, and that's how we win with the stock market. My name's Ryan, CEO and head quant at Happy Trader. Have a great day and happy trading.